Hey everybody, my name is Brandon from thestockstudents.com, and today I want to talk about Netflix stock, ticker symbol NFLX. What I want to do first is I want to go into Google and talk about why Netflix stock is jumping over 12% in the after hours today, and then I want to go into the earnings report and talk a little bit about the growth rate and the fundamentals of Netflix, and then I want to go into the trading charts to see if we can find a level or two to buy Netflix if we want to buy Netflix. So now let's get started. So here we are in Google, and here's a one-day look at Netflix's stock chart. And as you can see in the after hours here, we are pumping the stock up over 12%. That's over $62 per share. So, as always, when you see big moves like this in stocks, especially in big companies as large as Netflix, the first question that you should ask is always why. So if we scroll down here and take a look at the news of what's going on, we see that everybody's talking about the subscriber growth in Netflix's most recent earnings report. And, for good reason. One of the very important factors that you have to consider when you're investing in Netflix is its growth rate. The reason for this is because the growth is really one of the only things that gives rationality to Netflix's ginormous valuation here. If we look, we have a market cap of $221 billion with a B, and also its huge PE ratio, which is 81, which is, not really that cheap. So we're going to be talking more about this when we go into the earnings report in a couple minutes, but I just wanted to say that honestly, I was not expecting this at all. If you asked me before they've reported earnings today if they would show subscriber growth or if the stock would pop in the after hours, I would have said no, because I would have been thinking about the pull forward effect. Now, you've probably heard about this already, but the pull forward effect is basically just a concept that because of the health crisis going on here and everybody being locked in their homes, it's the idea that everybody who would have bought a Netflix subscription would have already bought one in quarter 2 or quarter 3, which is, one of these quarters over here around this time period. So there would be nobody left to buy new subscriptions in quarter 4, which would be this time frame over here. However, if we look at the quarter 4 earnings report for 2020, we see that Netflix is actually still adding subscribers, which is likely beating most of the expectations on Wall Street, and honestly has beaten my own expectations. So, now let's move on into Netflix's earnings report and talk more about its growth. So here we are in one part of Netflix's earnings report, and this is the regional breakdown. So Netflix gives us a nice regional breakdown of where the business is coming from. And as you can see here, they give us a nice breakdown of the US and Canada streaming business, and then the European streaming business, the Latin American streaming business, and the Asian Pacific streaming business. The first thing I want to talk about here is kind of the small growth of the US and Canada business up here. The way we see this is looking at this paid net additions line here. We can see that in quarter 4 of 2020, the most recent quarter here, we are only adding 0.86 million subscribers. So if my math is right, that's 860,000 subscribers. And honestly, that's not that great. We see that it's better in the last quarter, which was 0.18 million subscribers or 180,000 subscribers. But overall, this is kind of small compared to quarter 1 of 2020 and quarter 2 of 2020, where we were growing at like 2 to 3 million subscribers. This is just one of the evidences of the pull forward effect that I was talking about before, and this isn't really the important part of the earnings report here because the growth isn't as big. This is not the thing that's driving the stock up 12% in the after hours. I would like to continue seeing the growth rate of the US business, but I think we're already saturated in this part of the world here. So this is just something you have to consider before investing in Netflix. But again, this is not the important part of the earnings report here. What is the important part of the earnings report is if we scroll down, it is these 3 regions of the world that is contributing to Netflix's growth. This is what I think is contributing to the stock being up 12% in the after hours. We see here in the European business here that if we look at the paid net ads, we are growing at a 4.46 million subscribers. Latin America is growing 1.21 million subscribers. And Asian Pacific, we are growing at almost 2 million subscribers. And now these numbers, now we're cooking with gas. This is where the growth will be for Netflix's business for the next few years. And if you are an investor in the company, then you should always be keeping your eyes on these numbers here. And again, because we are growing at a nice growth rate in these 3 regions of the world, this is the main point of the video. And I think this is what is helping the stock rise in the after hours. Now I kind of want to scroll down here to the consolidated statement of operations. And here, nothing is really standing out to me or that's surprising or impressive here. As we all know, Netflix is a giant Goliath, so obviously their fundamentals will be incredibly efficient. The one thing I do want to point out, however, is this increase in marketing expenses quarter over quarter. So as you can see here, last quarter we were spending 527 million USD, but in the most recent quarter we are spending 762 million USD. So that doesn't really concern me though. This is probably what is helping to increase the net additions in the Euro, Latin American, and Asian Pacific markets. So, like I said, this is not a concern. It's just something you should be aware of. So the last thing I want to talk about here while we are on the earnings report is I want to talk about the main bear case for Netflix here. And that is the incredible amount of new competitors that we have just seen that entered onto the markets. Just a couple of years ago, if you were talking about streaming companies, you were literally just talking about Netflix and maybe HBO. But now we have, Disney Plus, we have Fubo TV, we have Roku, and probably many others that I haven't even heard of. So, the question I want to ask is, how many streaming platforms are you going to want in your house? I don't know about you, but I only have 24 hours in a day, and a good amount of those hours are for sleeping and my day job. I don't want to pay for 15 streaming services when I don't have time to watch all of the content from all those things. But, that's just me. I'm cheap. Netflix is the king of streaming, but just because it's on top now doesn't mean a Disney Plus or Roku or something we haven't even heard of can take it down from its throne. I'm not saying it's going to happen. I'm not saying it will happen, and I'm not saying it's going to happen soon, but this is just something you have to consider before investing in Netflix, is that there could be other competitors in the space that could take market share away from Netflix. So, now that I've talked about the boring earnings report and talked about the great growth rates and the possible headwinds for Netflix, now I want to go into the trading charts to try and find a place to buy Netflix if we want to buy Netflix. So here we are in Netflix's trading charts here, and as you can see, since June, we've been really trading in the sideways pattern here from this range between, let's say, 460 and 560. Now, I've seen a lot of people get a little disgruntled that Netflix hasn't been shooting upwards like it has been in the past, but honestly, I get a little excited when I see stocks like Netflix trade in a sideways pattern like this. I really like stocks that are going sideways because it gives me an opportunity to trade these pops and buy from the support level down here at the 460 level and sell my shares up at the 560 level up here. So this blue line here is where we are in the aftermarket hours. As you can see here, we are right at the resistance level. So, there's two things that could happen here, obviously. One is that, Netflix breaks out of this 460 to 560 range upwards and continues on to making all-time highs. The second, however, is a repeat of history, and we get rejected on this 560 level like we did here, here, and here, and we fall back downwards. Now, I think that the most likely scenario that we will see is a breakout from this 560 range upwards, at least for the next day or two. Let's take a look at the MACD here, which is a measure of momentum. And as we can see, if we zoom in, so this hasn't calculated the aftermarket trading here, but if we do a hand-wavy math calculation, we may see that the blue line crosses over the orange line, which is a bullish sign because that means that our short-term momentum, which is the blue line, is stronger than our long-term momentum, which is the orange line. And that means that there could be more upside momentum for Netflix here. Another point that contributes to my guess that there could be more upside to Netflix is because of the RSI. So here's another momentum indicator, the relative strength index, and as we can see again, this hasn't calculated the aftermarket trading, but if we do a hand wavy calculation, my guesstimate would be that we are about the 60 level here, and that would not put us in the overbought range, which would be over 70 for the RSI. So again, that indicates that there could be more upside to the stock before we hit the overbought range. So those are the two main contributing factors to my opinion that I think we could break out on Netflix. But again, of course I could be wrong, and that we could get rejected again at this 560 level and come back down. And if that happens, then I think that we'll be stuck in the sideways universe for a while. But if any news can bring Netflix out of this range, I think this earnings report has a good shot to do it. So, where would you like to buy Netflix at? Because we are at this top of the resistance level here, this could be a good place to buy if you want to play for the breakout level. But, knowing me, I'm a little cheap, so I like to get my stocks a little cheaper. I would like to get it down back at the 460 level, but I don't think it will get down that way. So I think this 530, 540 level will be a good spot to step in if you want to step into Netflix. So that was my review on Netflix stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.